Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of previous monthly resistance, which has now turned support. In fact, if we look closely, what we can see is that exactly from this level, all this previous rejection to the downside was created. After the market broke above this level, last month when it closed back above this previous resistance, which at that point after the close above it was turned support. And at the moment what we can see is that the market is testing here with this wick exactly this previous monthly resistance turned support, respecting it as support, and from this level we could expect more bullish continuation to be created. Now if we drop down on the weekly time frame, what do we see? Well, from a weekly standpoint, the structure is even more clear. In fact, we can easily identify this area here, which is very strong previous supply and resistance from which both these previous rejections to the downside were created, which is now turned here support and demand after the market broke it to the upside with this impulse. Now, since the market has created a very strong impulse to the upside, what we know is that from a pattern standpoint, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the market retraced precisely to the 0.32 of the Fibonacci taken on the impulse leg, which was also lining up very well with this previous resistance turn support, actually creating confluence of support inside of this area that we did in fact expect this market to reject to the upside. In fact, the market has already started rejecting this level to the upside. So also here on the weekly, we could expect more bullish continuation. Now, dropping down on the daily time frame, what do we see? Now, from a daily standpoint, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. And in fact, that is exactly what the market gave us. Then we had this impulse and correction. From here, I explained all the reasons for which we could expect this continuation to the upside. And again, that is what the market gave us. Then we had this impulse correction and explained all the reasons for which we could expect the creation of a higher high. And after the market printed this M pattern just a few days ago when the market was here, I explained all the reasons for which we could expect this rejection to the upside for the completion of the pattern at the neckline, which is in fact exactly the level that the market is currently testing, completing this pattern. And by the way, I will link in the description all these previous analysis so you can go and check them out for more free education. Now, before we continue with assessing the new structure that we have from a daily perspective and where we could be looking for the next potential move, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is essentially what hedge funds and the biggest players in the market are doing. Now, what we can see here is that with the last reports, net positions have been consistently increasing. We went from having 71.4k net positions all the way up to having 166.2k net positions, with an extra 600 longs added on the institutional side of the market with the last report and 2,100 shorts getting closed. So institutions are consistently moving to the bullish side of gold. adding longs and closing shorts, which obviously makes gold stronger. In fact, at the moment, we are sitting with 261k longs compared to only 95k shorts. Now, moving back to the technical side of this market, what we must notice is that in creating this move to the upside, the market is also currently breaking above a new structure level. In fact, this level here, which is essentially this previous high, is now previous resistance that, since the market is breaking it to the upside, is turned support here. So what we could expect, especially if the market will clearly break above the zone, so we need to see more bullish continuation before this is a clear break, and essentially we also need to see a daily close above the zone. But anyway, if the market actually breaks above this level, at that point this previous high would become previous daily resistance turned support here. So if we get this successful break on the retest of this previous resistance turn support, this is definitely an area inside of which we could see more institutional longing. And if we see more institutional longing, that would further increase the probabilities of a potential rejection to the upside away from this level. So if we actually get this break on the retest of this previous resistance turn support, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, potentially what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down past the testimonials, you will see that you have the possibility to gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.